I think that AI probably for the next decade or two, if not longer, will be the most important technology. I think the biggest mistake is always emotion. Stocks are very easy to transact, and therefore, human emotion comes into play in a way that it doesn't in any other form of investing.
The GameStop short squeeze of 2021 is remembered by many investors as a wild phenomenon. But if you're D1 Capital Partners founder and chief investment officer Dan Sundheim, you would call it the worst 2 weeks of your career.
I was holed up in my office at home. It was like a patient in, it was quite intense.
D1 had taken a short position in GameStop, betting the stock price would fall. Everyone knows what happened next. Retail investors, people who don't invest professionally, bought the stock in droves, encouraging peers to do the same. The stock soared in value, and Sundheim's D1 was one of the professional shops that took a short-term beating.
I hadn't ever failed before in that kind of a way.
Before GameStop, Sundheim's investing career was a straight upward trajectory. After a few short years in investment banking, the Wharton graduate entered the hedge fund world at Viking Global Investors, where he would stay for 15 years.
I started out as an analyst covering banks, and over time I picked up every other sector and became co-CIO and then CIO.
And then in 2018, Sundheim struck out on his own with D1.
It was inspired by the phrase day one, which Jeff Bezos refers to a lot, and how he thinks about Amazon.
On day one, Sundheim opened the doors with $5 billion of raised capital. Today, D1 has $23 billion of assets under management. As for the GameStop saga, the years have provided Sundheim with some perspective.
Dealing with that kind of adversity and coming back from it is what I'm most proud of, because that was the most challenging part of my career.
Many people in the investment world are worried about the impact of tariffs and what it will do to the markets. Is that a concern you share, or do you think the tariffs are not as big a problem as some people are saying?
I think it really depends on how significant the tariff rates end up being. I think the market is implicitly assuming right now that tariff rates won't go through anywhere near the rates that are being talked about, that it's more of a negotiating stance than it is a real outcome. If they were to actually play out and the actual tariff rates were what Trump is suggesting currently, it'd be a very big problem.
What about inflation? That's been a big problem for the last couple of years after COVID. Are you worried about inflation anymore, or do you think that's largely under control?
Largely under control. I don't believe tariffs will be inflationary on an ongoing basis. It's a one-time step up in prices, probably offset by some demand destruction.
What about a recession? We haven't had a recession for quite some time. Historically, we have one every 7 years in the United States, and we haven't had one really for a while.
Yeah, we're always worried. I mean, I think that the chance of recession at any given time is dependent upon where you are in the cycle, what's happening from a fiscal perspective, what's happening with monetary policy.
So if you're going to look at a stock to buy, a company to buy, you tend to look at it for a month or two or three before you complete your research?
It usually takes us, if we've never looked at the company before, most companies we do have looked at in the past, but if it's a new company, it'll probably take us 3 to 4 weeks.
And when you're doing that type of thing, do you actually talk to the CEO sometime, or how do you deal with not getting inside information?
Yeah, we try to talk to the CEOs of every company we invest in, and we have compliance, our general counsel, and most public companies are already pretty aware of what they can say and what they can't say, so it's not a big issue.
So you are one of the few, but not the only large firm of your type that not only buys stocks of this type, but also shorts them. Mm-hmm. Shorting is a more complicated business in many ways, unless you're really hedged. Why are you comfortable doing shorts?
I started out in the business. I got my first job because I wrote up a short report. I like shorting stocks. I find it intellectually challenging. And from a business perspective, there are a lot of people who are talented at buying stocks. There are fewer people who are talented at shorting stocks, or perhaps fewer people who had the desire to short stocks because it is more difficult and more stressful and less profitable over time.
So you were involved in a very famous short that didn't work out quite so well, called GameStop. Is that right?
Correct.
It seemed as if somebody was manipulating something or another so that a company that maybe should have been shorted all of a sudden became a heroic gainer. How do you deal with something like that?
Painful. That was the toughest. That was the toughest few weeks of my career, and I'm hoping that that period of time will be the toughest going forward. Unfortunately, we had never seen shorts go up 300, 400% in 2 weeks. It wasn't in, even a 5 standard deviation move based on history. No one had ever seen that. So, from a risk management perspective, we just weren't prepared for that, and we ended up taking off the positions at the worst possible time, knowing it was the worst possible time. But if it had gone on for another couple of weeks, it was that painful and that damaging that we had to do it.
So in the hedge fund world, when you take a position, let's take a long or short position, and it moves against you almost in the beginning, do you say, I made a mistake, I'm getting out of here? You say, I know more than the market knows, I'll wait a month, I'll wait 2 months, I'll wait a year. How long do you wait before you say the market knows more than you know?
It really just comes down to the research. If sometimes stocks move and they move for a reason which is driven by fundamental changes in the business, in which case we have to reevaluate our thesis and perhaps, change our position. If the stock is, but oftentimes stocks move irrespective of what's happening in the business or the fundamentals. And in that case, that's more of an opportunity to double down on an investment.
And today, when you are making investment decisions, is it a team effort? You have a consensus in your organization? Suppose somebody says, I just disagree with this, and the other people don't agree with that person. Can one person hold up something other than you, or you're the only person who can hold up an investment from being made?
I mean, we don't necessarily have layers of people approving or not approving of investments. We have a collaborative culture where we all sit down and talk about it. And it's okay if some people are, usually it's not about hard disagree or hard agree. Usually it's gradations of this is an amazing investment or it's okay. And ultimately it's my job to listen to all the different opinions and come out with a conclusion.
So in the business you're in, when you say an investment is okay or good, you were looking to get a rate of return, let's say annualized of 20% a year when you're all said and done, or higher than 20% a year, or 15% a year? What are you looking for when you say, I'm going to go ahead with this investment?
It depends on the risk profile of the company, but in a large cap, high quality company, 20% over 3 years projected IRR would be sufficient. If you're taking more risk because the company's products are earlier or has more leverage, you're going to be demanding IRRs that are closer to 30%.
So you've been a big investor, as I understand it, in SpaceX.
Yeah. So
SpaceX is a private company. Many times hedge fund people buy publicly traded stocks or they short them. They don't do privates as much because it's a different game, really. But you do publics and privates, and SpaceX is a company you're invested in, right?
Correct.
And it turns out to be a pretty successful company based on private market valuations, I guess.
Yeah.
Were you in there early?
We first invested probably 6 years ago.
So the valuation now is probably, I don't know, a couple $100 billion.
350. Yeah.
350 billion is the last round they raised. Okay, and it was up before that it was like 175 or something like that. So you were in well below that. So
yeah,
pretty good
approximately
position.
30 or 40 billion dollars are probably where our entry point on a weighted average basis.
So in something like that, do you get concerned when the person who's the CEO of it or the founder of it is in the government and not running the company? Or I know they have a very good number two, but is that a worry or not so big deal?
It wasn't a concern for me. Look, I think that Elon's obviously, a generational talent, and I wish he spent all his time at SpaceX. Right. But he also has built up an amazing team that is quite capable of running the business day to day. And where he excels is stepping in and solving problems, not necessarily being there day to day to manage everything.
So I think you've been a big proponent of artificial intelligence as something that's really going to change the world. Do you invest in small companies that are in artificial intelligence, or you go to the well-known names in artificial intelligence? What's the best way to invest in artificial intelligence and make money?
The best way it's hard to say the best way. I would say the way that is most aligned with our business model is we've invested in OpenAI and Anthropic, which are two of the leading large language models. But I do think over time, there will be investment opportunities in many, many more companies driven by AI.
But you don't go look for the next young Anthropic or something like that. That's not your game, which is venture capital.
We don't go really early stage and try to compete with venture capital firms to invest in companies in the first year or two of their life cycle. We tend to invest when they get more mature.
Are there things beyond the internet and artificial intelligence do you think are the next technological waves that are going to merit your investing in them? So quantum computing or something like that?
Yeah, I think that AI probably for the next decade or two, if not longer, will be the most important technology. But just like the internet, you'll see other things that evolve because of AI, like robotics, biotech innovation. I think you'll see a lot of things driven by AI that are technological revolutions in and of themselves. Look, we never rest on reputation. I like to go out and meet clients, tell the story. Once clients get to know us, and the better they know us, the better the relationship is.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
Let's talk about how you started this firm and how it's grown to be quite successful. So let's go with your background. Where were you born?
I was born outside of Philadelphia.
Okay, and what did your parents do? Were they in the investment world?
My father's a doctor, he's an internist. My mom is an occupational therapist by training. But my dad spent most of his time outside work investing. So I grew up around stocks.
And you always knew you wanted to be in business, so that's why you went to Wharton, I assume?
Correct.
And how did you find Wharton? The people were smarter than you thought or not as smart as you thought?
I was intimidated when I went because I came from a public school where I think we had 450 people who graduated and 2 went to Ivy League schools, including me. So, my going in assumption would be that everybody there would be better prepared and smarter than me. I think that, at the end of the day, the people were impressive. But I felt that the education I got was sufficient. And, when I left, I didn't feel like, I was in a worse position than anyone else.
Some people that go to Wharton get a joint degree. They get an undergrad degree and they get an MBA almost at the same time. You got an undergraduate degree and then you went into the business world?
I went right into the business world.
And where did you go?
I went to Bear Stearns. I started out in investment banking, and then about 2 months into it, I moved into a group that did private equity within Bear Stearns.
And you did that for how many years?
3 years.
And then you left for a firm called Viking?
Correct.
Now, Viking was a so-called tiger cub, and it was a firm that was set up by Julian Robertson, one of his proteges, and you were there for how long?
15 years.
15 years. It's a long time to be
at
a
long time
firm.
in a hedge fund, yeah.
Okay. And you rose up from the very bottom to the chief investment officer?
I started out as an analyst covering banks, and over time I picked up every other sector and became co-CIO and then CIO.
Hey, when you're the CIO of a firm like that, you're responsible for everything. So did you do stocks, bonds, macro, or were you mostly a stock person?
We Viking and D1 are primarily focused on fundamental research in equities.
So where did you get the name D1 Capital Partners?
It was inspired by the phrase day one, which Jeff Bezos refers to a lot, and how he thinks about Amazon. And the idea is the first day when you start a business, there's entrepreneurial energy and a sense of motivation and open-ended growth opportunities. And the idea that I never wanted the firm to become slow and bureaucratic, and so every day should feel like day one.
And the firm is now, how old? What year did you start the firm?
We started in 2018, so it'll be 7 years this summer.
All right, so 2018, and did you say to people, I'm starting the firm, I've been the chief investment officer of Viking, and give me all the money you can, or was it easy to raise money or hard to raise money?
At that moment in time, it was a relatively easy time to raise money, and I've been doing it a long time, and Viking had an excellent reputation, and so raising capital was not the most difficult part at that moment in time.
So how much did you start with?
Approximately $5 billion.
$5 billion. And today you're managing AUM of?
About $23 billion.
$23 billion. And today the firm is headquartered in Miami?
We kind of joint headquarters in Miami and New York.
Okay. And today you still specialize in what you've always specialized in, which is stocks more than, let's say, macro kinds of things. Is that right?
Stocks, well, I would say fundamental research of companies expressed both in public equities and private equity.
So how many investment professionals do you have now?
Approximately 30.
And so you make all the final decisions. You're the chief investment officer. So do you say to anybody, you can invest up to a certain amount yourself, or everything goes through you?
D1 is a partnership, and the partners at D1 have the ability to make investments on their own in certain sizes, but probably 95% of the investment decisions are made by me.
And do you have to go out and make the sales presentation yourself, or your reputation is good enough you don't have to do that?
No, we have, look, we never rest on reputation. I like to go out and meet clients, tell the story, and I think once clients get to know us, and the better they know us, the better the relationship is, and the stickier it is over the long term. I hadn't ever failed before in that kind of a way, and so learning from that, getting better, and coming back from that is what I'm most proud of, and probably was the most difficult thing I've had to do.
So young students often say, I want to get a job at a place like D1 Capital Partners or a place like that. I need to major in a STEM subject in order to get there, because if I'm not majoring in science, technology, engineering, math, I'm never going to get hired, so I can't major in English or history. Do you only take people who've majored in STEM subjects, or do you take people who major in other things, or does it make a difference?
Doesn't make a difference. I would tell you that increasingly I have found that there are tons of people who are very good analytically, people who are good communicators, especially written. It's harder to find. So I would say that we are indifferent to what people major in, but we do care that somebody is both analytical and quantitatively competent, but also is a good communicator, because in our business, you have to make the case for an investment, whether it's verbally or written. And if you can't do that, you're going to have a hard time.
So in your long history as an investor, what's the best investment advice you ever received?
I think the best investment advice probably came from indirectly from Warren Buffett. And, it was when he talked about his evolution as an investor, where he started out buying cigar butts at 50 cents on the dollar, and then eventually coming to the realization that the best way to create value is to buy great businesses at fair prices and then let them do the work for you by compounding value. That was probably the best advice, because when you start out investing, you start out with a very quantitative approach, and you're looking for things that are just like trading well below fair value. I think the idea of identifying and then buying great businesses that may be trading at closer to what people perceive as a fair value, but over time will compound value, was a change in mindset that was important.
So what do you think the most common mistake that investors make is? That's the average investor, not a famous hedge fund person. What's the average person's biggest mistake, would you say?
I think the biggest mistake is always emotion. When you own a home, if your home goes down in price, you don't wake up that morning and get scared and fire sale it. You don't do that with any asset you own. But stocks are very easy to transact. and therefore, human emotion comes into play in a way that it doesn't in any other form of investing. So I think people make mistakes both in terms of greed and fear, and it's mostly driven by different emotions.
So for somebody who's a young investor who's starting out in his or her career, just as you were 20 years ago, what advice would you give them about how they might start their own firm or their own career?
I think starting your own firm in this business is very difficult and usually a mistake because you only get one shot to start your own firm. And if you fail, it's hard to do it again. So I would suggest start out by reading as much as you possibly can of whatever, if you're interested in fundamental investing, as I said, I think Buffett's fantastic. If you're interested in other forms of investing, I think reading is the best thing to do. And then go to the best firm you can and learn working for people that have done this for a long time. This is the kind of job that you're always learning. I learn every day. And so for anyone to think that they can start their own firm without any experience, I think is the wrong risk reward.
When GameStop was going on, did you find your friends looking at you differently, or do they call you all the time and say, how are you doing? Or is it a different kind of way you were treated or not?
I mean, it happened in a period of 2 or 3 weeks, and no one was looking at me because I was holed up in my office at home. I was getting calls, more kind of people trying to inquire what's going on, how bad is it, but generally people kind of kept the distance because it was, it was like a patient in, it was quite intense, and that period of time though was about 2 weeks, and then we closed out the positions, and that was also very, very painful. We had to deal with it afterwards. But then we had another setback in 2022, and I kind of think of both of those as being a period of time where there were just a lot of challenges for our business in particular, and we had to make a lot of changes. So coming back from that was difficult. It required us being very introspective about what we did wrong, what we had to do to fix it, and then pushing ahead and putting one foot in front of the other.
So one final question. So as you look back on your career, very impressive career, what are you most proud of having achieved so far? And if you could live your 25 years, let's say, over again, what would you do differently?
Yeah, I think, look, I am most proud of, for a long part of my career, there was very little adversity. I joined Viking, and it was, we had 15 years of just, obviously there were periods of time when things weren't as good, but there was no real adversity. After starting D1, about 3 or 4 years after starting D1, we had several periods of pretty intense adversity in the investment part of the business. And you brought up GameStop as being one event, then 2022. And for me, dealing with that kind of adversity and coming back from it is what I'm most proud of, because that was the most challenging part of my career. I hadn't ever failed before in that kind of a way. And so learning from that, getting better, and coming back from that is what I'm most proud of, and probably was the most difficult thing I've had to do.